Welcome, everybody. My name is Michael Camo. I'm Director of Content for T3 Live, and I brought in my good friend Adam Mesh, who's going to teach us how to make sense and hopefully some money out of chaos. Adam also made a huge mistake. He told me I can ask him anything I want. So don't be surprised if things get a little strange today. So Adam, how are you doing today?
I'm good. I'm a little tired. I made a mistake last night. I was watching Full Swing with my wife, and I fell asleep for an hour, and then I woke up, which has just screwed me for going to bed the rest of the night. And I was just like tossing and turning for hours. You can't nap at 9 o'clock at night. It's stupid.
Yeah, it's one of the worst parts of getting older is tiny interruptions to sleep routines and schedules can mess you up. So everybody, let us know where in the chat you are watching from. We're just curious where everybody is. So let's start on sort of an offbeat note. So if you're not well rested, does it put you in a certain type of mood?
I have to be much more aware of my trading if I feel like I'm not well rested, that I'm not overtired and a little bit out of control.
Yeah, I know. I'm cranky and miserable when I'm tired, so I couldn't imagine making trading decisions. Okay, so
by the way, I like to get the comment section going with everybody.
Yeah.
Jim said hello. I like to see people chat in. I know there's a delay, so please feel free. I don't know if anyone heard last week when I interviewed Tom Sosnoff, but that was a great 1 hour, and there were a lot of questions, which really drives everything. So anything people want, just definitely bring it to the chats.
Yeah. Let us know in the comments anything you have to ask. Adam is an open book, and he likes to do things on the fly. Okay, so Adam, let's talk a little more about this market. So the theme last couple weeks is just chaos. I mean, we're today we get the light CPI, which was a big deal for like 3.5 minutes. Then we came back down. Now, look, last week you said that this was kind of bringing you back to the old days in the 90s and early 2000s when things were, I guess, were a little wilder. Like, do you still feel that way?
Yeah, absolutely. I've been making at least 150 trades a day and up through over 300. So yeah, definitely active.
Okay, so what are you mostly day trading, or is that like is there swing trading, long-term investing in there, or are you just making fast moves?
So I'm holding some positions and then managing around them through actively trading the swings.
Okay, so in terms of the broader environment, like what kind of hat do you have on now? Is it like no, I didn't mean, well, okay, we could start with the literal hat. What is that hat?
I'm kidding.
Yeah.
It's Savannah golf course. But.
Okay, so when you sit down every day these days, is it like hyper short-term hat on? Is that what's happening?
Honestly, I feel like any day could be like a $50,000 day. Not a lot of risk if you're just there, present, and catch the right market with the right headline. I honestly am feel like I've taken some big swings, not hit, but still been fine. Like I'm up money for the week, doing well, but haven't had that one really big play that I had a couple of them last year where you have those big days that really help.
Yeah. Can you plan for one of those big days though?
No. That's all based on the market. And I mean, just yesterday, for people who were trading, you saw, I mean, there was almost a peace between Russia and Ukraine. They were talking about Ukraine's agreeing to terms of peace, and then tariffs were on, and then they took it back a little bit, and Canada wasn't going to give us electricity, and we're going to tax, and then it changes. And so with all these headlines comes opportunity, and the market has really widened its range. There's also something someone was explaining to me. This is pretty interesting. I don't even know if anyone could explain it better than I can. I'm sure there is. But apparently there's this like JP Morgan does this really big $10 billion hedge every month on the markets that doesn't really come into play unless the markets are down a certain amount. But once they're in that range, their hedge is a covered hedge, but the people on the other side who take it are exposed. And once it comes down into that range, they have to protect themselves. So they have to buy every up move and sell every down move, which is why you're seeing these more extreme moves. And apparently it's going to be like that for the rest of the month. So what we're looking at is these wild intraday moves should be going for all of March.
And I take it you're happy about this?
Yeah. I assume everyone on here is. The last week was really good with the chat. This week we're
yeah, people, I don't know, YouTube, something fishy is going on because YouTube is usually where most of the chat is, and YouTube is dead today. But okay, so I think that's interesting because from what I see, traders are always saying, I want volatility, I want the crazy action, and then when we get it, at least in our communities, the crankiness level goes through the roof. So what keeps you optimistic for these volatile periods? And of course, VRL steps up and says, "I'm here." Thank you. Finally, some people stepping up. Okay, yeah. So how do you sort of stay optimistic for these during these turbulent periods?
Optimistic?
Yeah, at least in looking forward to them, and it seems like you're enjoying them.
Yeah, I mean, there's just opportunities to trade. So, yeah, if anything, I don't want to miss it because the market isn't like this often. So it's just appreciative of and just waking up every day hoping we don't get stuck in like today. Right now, we actually this is the most I've seen us kind of go tighten down back and forth for the last couple hours. It's been a little slow. Which is actually really good because of a trade I put on, which I can show you if you want.
Do I want to see the? Of course I want to see it.
Yeah, this is pretty cool. Let me show you.
Hold on. StreamYard screwed up their platform. They changed their interface, so I'm a little slow. But yeah, let's go. So Adam, what should we be looking at?
So the Russell, and I did get this from like a specialist who knows this trade well. Because the volatility has been so crazy every single day, assuming you have some sense of a direction, overall we're in a bearish market. So what I did was I bought tomorrow's 200 puts in the Russell, and then I sold today's. So I paid $1.56 for the ones for tomorrow, and I sold the puts for today for 70 cents. And because there's so much risk overnight, you expect the options, as long as there's not like some crazy move right now today, up. If there's a crazy move up, this trade wouldn't be good. But also that's a hedge because if there's a crazy move up, I have positions on that I'd be psyched, and I wouldn't really care about this. But so if you look, the $1.56 has gone down by 40 cents. And right now this has gone down by 40 cents. But if it just continues to hold here or go a little bit lower, what's going to happen is these 200 puts will be worthless and these 200s will still have value. So the ideal close would be around 200. The further it goes up, the worse this trade is. But I also did it as a hedge to all the other stuff I have going on.
Okay, so I noticed this during earnings season a lot, where it felt like the market was pricing in too much volatility because it seemed like there would be all these stocks where they'd be priced for like 9, 10, 11% moves, and then they'd move like 1%. Do you think that the same thing is kind of happening at the index level?
No, I think the volatility is warranted right now. The options market's always correct. Whatever they're expecting the move to be is always right. But then you have all these headlines, and also like it's kind of like in bingo when you shake up the bag, you know, the market just got knocked down to new levels, so it's trying to find its footing. Like where's its highs, where's its lows, and so you're seeing that back and forth trade, which is if you're disciplined and you get that's a problem. You want to be disciplined, and the right way to trade these is to be light and get in and out, which I've been doing. But there are going to be some extreme moves, but the only way you could profit and make those big days is if you're in for the extreme move. So I think the only way I'm going to really get paid on that really big day, because I don't hold stuff long enough, would have to be that it happened really fast. Like there was a huge power move up or down that I was a part of, because I can't. The faster it goes, the wider they get. It's hard. It's hard to hold. And I don't think you're supposed to. Most of the time, I would have been wrong holding, because these options end up worth zero. So you're in, out is the way to do it. Eric said the challenge is constantly getting stopped out. Yeah. So if you're constantly getting stopped out, I would question your size, first of all, because if you're in a position where you're like, because the reason why you get stopped out, and I don't use stops, but in terms of levels and stuff, if I'm trading something, if I'm getting out, it's probably because I can't take it anymore. And I'm going to find that feeling faster if I have more size. When I'm really light, I could make bigger moves and it's easier to sustain. So the first thing I would say is check your size in this kind of volatility. And if you feel like you keep getting stopped out, maybe trade smaller size and give things a little bit more room on both sides. Because it is that back and forth action today. So I think that's number one.
Oh, okay. So you said you don't use stops, Adam. Why don't you use stops?
Defined and risk is set based upon them. So it's not that. Well, so I know the pristine method is a part of T3. I don't know what goes into that. Feel free to explain it. But if it's based on a certain, is it based on a certain percentage? Because if it is, that's going to change based on the market volatility. So are you adjusting your parameters based on the market?
Yeah, so saying risk is set by dollar amount. So Adam, I think like it'd be.
Well, then what I'm saying was correct. If your risk is set by dollar amount, then you could lower the number of shares, which would give you more room, because for you to get down that amount would take more.
Yep. Okay, Adam. So I think you said you don't use stops. Can you explain why?
Yeah, I'm first of all, there's too many bad fills in the opening of the market when things gap out, and especially as an options trader, I'm trading almost all options, and those can gap out, and you can just really be taking advantage of. So I don't believe in stops for options.
Okay, so so when do you know when to get out?
It's going to depend on a couple of things, like, the price action of the stock, how it's looking. But like a lot of the options I trade are inexpensive. So that if they were the daily options and the indexes or whatever, if they went to zero, I'm okay with it, because I'm usually buying out of the money anyhow. So I'm not that.
Okay, so just so we understand, so if an options trade goes against you, you just let it ride to expiration?
Depends on the cheaper the option, sure, you know. But no, I think it really depends. Like, I'll give you an example of one where I did get out. Okay, so yesterday I was trading really well, felt really good, looked like the market was going to go towards the end of the day. As we know, the market didn't finish at its highs, and I saw Uber, which is a stock I like, was trading around 70-ish and change, whatever it was, and it had been as high as 74.80. So I'm like, okay, if we push to the high of the day, I think Uber could make a run. And the options were trading around 60 cents, you know? And I bought like 20 and started to tick up a little bit. And I'm like, oh, I love this trade. We're going to go. This is going to be good for $2. So then I bought 80 more. So I had 100 Uber calls, risking $6,000 that would expire Friday. And then immediately the market stopped going up, and Uber looked worse than the market yesterday. And all of a sudden I realized not only did I hate my decision, but I bought way too much, which is breaking my own rule. And at that point, that's just a control thing. Like, I'm an idiot. I shouldn't have bought 100. This market's not going anymore. Get me out because it was a bad decision. I'm not going to wait to see how much more I'm wrong. And I was getting out between 40 and 50 cents. So I lost 2,000 versus losing 6 because it went to 0. That was either like, this is all going now or it's not. And I was like, it's not. But I held 20 because that was, okay, if I'm right and it comes all the way back up, I'll still be on money on the trade. But if not, I lose another $800. And then this morning, Uber opened up. I sold half. And even though it's up 50 cents for the day, I'm up money in Uber for the day, but those options are actually lower than when I came in, the 74 calls. So that's an example of where it's just kind of like, I'm either in and it's going, or if it doesn't, I'm out right away. I knew things were off.
Now, when you put on a trade, do you just get a feeling this is just not acting right? I'm dumping it. Is it that simple?
Try to make it more than a feeling. It's more about how it's performing versus the market. And if something looked good and all of a sudden it turns and I realize my read was wrong, yeah. I'm trying to make a lot of decisions quickly. And the ones that prove me right is when I really want to lay into them. And the other ones when I get involved and it's not happening and I don't like it, I want to be out quickly. So everything's fast, lots of decisions, and just trying to catch those power moves. Like, we've talked for the last couple of weeks about one of the stocks I'm in. You guys highlighted it as one of my favorite positions. And, some Core Z, right? Remember we talked about it?
Yep.
So it went down. It was at 11.77. It went down to below 7, right? And I said, this is one that I like, and I'm going to try to stay in. This is the one I said I was holding. All of a sudden, I'm watching it, and it goes 7, 7.10, 7.20, 7.30, 7.40. I'm like, okay, I'm buying as much as I can, because that's where I talked about last week. I'm being rewarded for watching the stock that I know something fishy is happening. The whole market's down on Monday, and this thing's racing up in the face of everything. Something's going on. Buy. Well, turns out that CoreWeave did a deal with OpenAI, and Core Z is directly connected to CoreWeave because CoreWeave hires Core Z to do a lot of their stuff. So it was a really big $12 billion deal that CoreWeave signed. And, this stock kept going up to, it's sitting at, now it's above 9. So I made a lot of money on this week. So even though I got involved at like 10, 11, it went to 12 and then came down to 7. My biggest purchases came between 7 and 8. And now it's at the highs of its day, even when is the market at the highs of its day? No, market's not at the highs of its day, but so
what are your favorite types of names to trade? Like, is it these more speculative names like Core Z? I know you also do the Qs a lot. You highlighted the IWM trade before, but like in terms of like hitting the keys, what are you trading most often?
Yeah, I try to find strong stocks that I could believe in. Viking Therapeutics, I bought the dip yesterday. That one was good. Core Z was good. I have like a handful of stocks I'm always watching. I traded Palantir this morning a little bit. Uber, I like to trade, and then I'll trade the indexes too. Because if I have a strong feel for the market up or down, then you don't want to be in the wrong stock where the stock doesn't do what the market does. So the diamonds don't have the dailies like the Qs and the Russell do. So if I'm really looking to take a big swing, I'll trade the Qs. If I feel like I'm a little bit behind, I'll trade the Russell because it moves slower.
Okay, so you do love these like 1 day options?
Yeah.
All right, let me ask you a sort of a random question. Do you think we should have, because we're moving to a world of 24/7 equity trading, that seems inevitable. Do you think options trading should be expanded upon like outside of the normal hours?
No.
Okay, why not?
Because then for someone like me, I never want to feel like I'm missing out. So I like that there's a beginning and end to the day and then it stops. I don't want stocks to be available 24/7 like futures because then you have no life or then it's just different and you feel like you're missing out. Like I think it would ruin everything personally.
I mean, I do think it would be nice for earnings reports because I think everybody's been in the situation where they buy a bunch of calls, the stock pops, and then by the time the open comes, it's flat.
Well, you could trade until 8 o'clock, and the earnings come out at 4:30.
Yeah, but I mean, if you're talking about like boxing calls and things like that, and shorting stock against long calls and stuff, life gets complicated pretty quickly for the average person. I mean, it would probably be bad for like would probably be bad for traders as a whole. Like if people are trading options after hours, that's going to get hairy real fast, especially with liquidity issues. Okay, we have a good question from Omar. What should new traders watch out for with volatility high?
Wild swings. You don't want to get stuck. First of all, you never want to average down. I think that's a big thing. You don't want to average down in this market. You're going to have big momentum swings where you power up. Like today, market was pushing towards its lows. Then it flipped, and now it's pushing towards its highs. And the whole saying, the market can remain irrational more than you can remain solvent. So you want to be light, Omar. You want to be light and flexible with what you're seeing. If you're looking for an easier path than the market, the best thing to do is try to find strength and weakness. Like what's something that's performing strong in the face of a down market that could hopefully go higher, So Viking Therapeutics was resisting going down. And then yesterday they signed a deal, which indicated that they're probably not for sale. So the stock came down, but they said we could still be for sale. This is the kind of deal we would have done anyhow. And then today it really caught a bid and was good. And so if you're watching these stocks that were showing strength and you thought that was an irregular sell-off, you got 2-3 points back the next day. It's just big moves. You're getting these big moves. You just want to be light and you don't want to be stubborn.
Okay, but do you think this is almost a good learning environment because so many things are happening so fast?
Learning environment.
I mean, like if people are getting, all right, let me put it this way. If you're sort of in a low volatility uptrend where basically everything goes up a little bit at a time, some faster than others, like how much are you really learning? But I mean, so could it actually be better for people to get, bumped and bruised a little bit, so at least they get some sense of reality?
I don't know. That's a good question. I don't know.
Well, yeah, the thing is, like, it's
I think if you know what you're doing, this is great. I think if you don't, to start to learn in this environment, because inevitably you'll get markets like this again in the future. So yeah, you want to have experience when the market's like this, no matter what, because it will happen again. So yeah,
yeah, and
trade every market.
yeah, and like
Always trade.
yeah, and like we are seeing, big swings down, but also big swings up. So I mean, do you think making a lot of money in a market like this, do you think like that could lead to some false confidence?
No, I think that would be real confidence, because this is a challenging market. It's very volatile. You're messing with the big boys. It's like, I mean, I like surfing as the analogy. If you could go out and succeed when the waves are the biggest, then you're going to be fine when the waves are smaller. I think it definitely wouldn't be false confidence. Would be buying every dip for the last 5 years and being rewarded for it. That eventually runs out. I think that's false confidence. This is a real back and forth market. So for a trader, if you can navigate this market, you're psyched.
Yeah, I'm going to sort of babble a little bit. This might make zero sense. So bear with me for a second, Adam.
Yeah.
Since the swings are so big, why can't sizing up be a good idea? Because it's like if the chance of a big move is at its highest, why shouldn't we size bigger? I'm not talking like your whole account or something. But is there a case for being more because the waves are bigger?
Well, it gets back to that question that Eric asked. If these moves are wild and they're back and forth, so the bigger the size, the more your money's going to swing. So if you can't handle that, you're not going to be able to hold on as much. So the ability to hold that, well, like the Russell, I bought the 201s for 87 cents. I bought 80 of them. That was going between 50 and $1. That's $4,000 swing. That's a lot for the day, So then I got smaller when I was up in it, and now I have 5 and it's $1.43. So yeah, if I held 80, it would have been worth a couple $1,000s more. But also, if I was holding 80, I might have sold it the last time it went back down to 40 cents, which it did 3 times already. Like it's gone between 40 and $1.50 over and over again. So like the more your size is, the more it gets harder to stomach those swings. The smaller your size is, the easier it is for you to stay in and get in and out for profit.
Okay, now how far are time-wise are you looking out? Like, are you looking at everything day by day? Do you ever even think about where the market could be in 3, 6, 12 months, whatever it is?
For my personal, for my investments and stuff, I'll take a bigger outlook, but I think for what I'm doing each day, I come in every day and just try to take what the market gives me.
So are you operating with, right now, are you operating with any kind of bias to the upside or downside?
No, I'm in a good place right now. I'm having a good day trading, and I'm accepting of whether we want to close at our highs or go back down. I was operating with the market being weak, but then it's come down enough where you expect that it could have rallies within here. And so I have no opinion right now, which is always when I'm at my best. I'm always happy when I truly don't know and don't care. Like maybe we go higher, maybe we go lower. Both would make sense now. Overall now, if you want to ask me, do I think we rally back to our highs this year? No, I don't. Do I think the more we go up, the more likely it is we go down, if that makes sense? Yes. Like, I'd rather be, like, I'm long, but I want to sell rallies. I want to sell rallies and buy dips. I don't think we're gonna have extended rallies. Like I'm not looking like, but the Qs could come back up to 500.
Yeah, it's interesting you say that you do your best when you're not locked into some opinion, because it does sound like a lot of people, they have political opinions or economic opinions, and they let that dictate their trading. It almost sounds like you're making an argument for Buddhism to not be attached to a specific outcome.
If you are not attached to a specific outcome with the markets, you'll do better. Individual stocks, sometimes it helps to just like take. I don't like to just go. I'm not usually going to go bullish, bearish the same stock. You know what I mean? Like when I got out, I wasn't like, all right, now I'm going to be bearish. I was like, either we go or I was wrong, and I'll reevaluate at a different point. So when I find something I like, I'm not going to go against that. I might not trade it, but I'll only go in one direction. So individual stocks that you like, you don't want to be flipping back and forth. There's nothing worse than being like, I like this. Oh, no, I don't. Oh, my God, I was right to have liked it, and now it's going up against me. That's the worst feeling. I won't get involved with that. So the market, I'll be flexible on. Individual stocks, I'll pick a direction.
Okay, so right now, as you look out there, or I guess even in your account, what do you like right now?
Still like that Core Z. It's been good. But I've lightened up. Viking Therapeutics, I sold for a win. Still like Uber for the long term. Like Palantir right here is at 83.76. I mean, it could be at 60, it could be at 100, right? It's that no man's land where things are resettling. I'm not making a lot of long-term investments right here at these levels. And by the way, I called my financial advisor. I'm like, you think we should be looking to buy? And they're like, no.
Really? I mean, aren't financial advisors usually just like, let's put our money away every month until the end of time so you can, retire happily?
No, but it's like in terms of when you buy and not buying the dip too early when you see a weak market, being patient and waiting. And they were like of the mindset to wait.
Yeah, I mean, like, would you rather just see an all-out crash, just get it over with, start over again? I mean, it definitely does damage to people. People do suffer.
No, I don't want to see a crash. Unless I'm have puts on. But I don't know. I just find this market to be like action and adventure. Like, look at Tesla. I mean, you have the far left zealots boycotting Tesla and trying to bring it down, and then the president rolls out with a fleet of Teslas in front of the White House. It was like, I'm going to buy one. I mean, like, talk about politicizing the market. It's like, if you're a Republican, you're buying Tesla, and if you're a Democrat, you're not. It's crazy. Like, I mean, when do you see stuff like that?
I mean, yeah, we are living in
today. Like, it's just crazy. I'll tell you this though, the right always spends more money than the left, so I'd go with the right on the Tesla battle.
It's so interesting because in the last couple of years, so I live in Brooklyn, and the number of Teslas I see on the street now is shocking. Like, I probably see these days, there's probably as many, at least in Brooklyn, there's probably nearly as many Teslas as like BMWs or Mercedes is. I don't know if I wouldn't say like Honda or Toyota just yet, but the number of Teslas on the street is ridiculous. And In a lot of places in Brooklyn, there are not driveways, but I see Teslas everywhere. It's crazy. Your friend Josh Horowitz is saying, not politically active, but I bought 4 Teslas. Josh must be having he must be doing well if he has 4 Teslas.
I love Josh. So Omar said, thank you. Being light is in smaller position sizes. Yes. Smaller position sizes is what I mean when I say being light.
Okay. So do you think Trump is a blessing for traders just because he's just like, because we normally have a bunch of catalysts with earnings and economic data, blah, 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 blah. And now it's just him with all of his activities and then all the reaction to his stuff. So is he just a blessing for traders?
He's just a blessing.
I just want everybody to know I am the wokest member of the T3 Live staff. I love Kamala Harris. I'm offended by Adam's statement.
Are you really?
No, I'm kidding. And,
oh my God.
I was going to kick Josh Horowitz out of the chat for that.
It's very interesting. I was a Democrat my whole life, and now I can't believe I ever was. Like I laugh at myself. I really do. Like I learned so much about the media and how they misrepresent things, and you have to be careful who you listen to. It's crazy. It's just so crazy. But yeah.
I mean, I think like it's something we've really learned over the last few years, how much the media is captured. I mean, like one of the funniest things is, so something like 80% of the advertising on the big networks, it's all pharmaceutical. It's crazy.
Weight loss drugs?
Yeah. I mean, those are, I mean, I've heard of people going to the doctor and the doctor suggesting Wegovy and Ozempic, like before exercise and eating better. They will, these days they go straight to the drugs.
I mean, my town, when you go to parties, it's just crazy how many people
the Ozempic face
have lost weight. Yeah.
And it's interesting because so I'm a shareholder. I own stock in Novo Nordisk, who makes Ozempic, specifically because if a celebrity, and anybody out there, you can look on YouTube, Instagram, if a celebrity loses weight, no matter who it is and what they look like, in the comments, people start commenting Ozempic, 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 Ozempic. So there is a flip side to it, though. The side effects, the negative impact of these drugs, who knows? They might not be worse than the side effects of obesity and diabetes and all the other bad things that can happen.
I don't know. My buddy had a bar mitzvah this weekend. If it wasn't for Wegovy, we wouldn't be able to have lifted him. But now, 50 pounds lighter, we threw that guy up in the air with pleasure. And
it's, listen, I mean, you can look at like the number of celebrities that have magically lost like 30, 40, 50 pounds over the last few years. It's and they're not putting it back on. I mean, listen, Oprah's
themselves the shots.
Yeah, listen, people want cures.
I have like great jokes now. Like when you see someone like really shrinking, you're like, dude, like lay off the needle, like it's funny. I don't know.
Listen, sometimes I wish I could take something to like resist. I've lost like 25 or 30 pounds in like the last few years, but I've stalled, and sometimes I'm like, wish I could take something just to stop me from snacking, just like take the edge off the snacking activity. Our friend Jim Mello is saying 245 to 185.
Man, now he could get thrown up in the air.
He's selling Munjaro better. Like, yeah, maybe he can be thrown up in the air. Yeah, it is.
I was light.
Jim, how tall are you? We're gonna do. We're
Doesn't matter. 185. You're going up in the air.
It's small enough for you.
Yeah. I mean,
Yeah, it is like the world we live in today. Like, just 20. It's crazy how much things have changed in just 20 years.
I mean,
20 years ago, there was no iPhone. Google had been public for like a year. Google was like 5-6 years old. Gmail, I think 20 years ago, Gmail might not have even been out yet.
do you think we close at our highs today?
You're asking me or our friends in the audience here?
Both.
I think so. I'm sensing an awful lot of negativity out there. It feels like the least likely scenario is the market skyrocketing back to all-time highs, which makes me think it might actually happen. Because I do think the Trump
to all-time highs.
Yeah, I mean, I don't know when.
You want to make our first wager on these calls?
How much?
It has to be something fun. I don't want to take your money.
Well, it's not about the dollar amount. It's about
You're wrong. You shave your head. If I'm wrong, I'll grow a beard.
Oh wow! What a daring bet. I wouldn't even be upset at shaving my head.
Ready? How long do you think? What would be your time that it hits its size?
I would say by the end of August. I don't even know if we would remember this by then. But
we will remember. We will remember.
Listen, if I'm wrong, I will probably not remember. But I love to gamble.
So, August, you said?
Yeah.
All right, guys. Here's the bets. The next time I'm in the city, which might not be until next year, but whenever it is, if we hit all-time highs, I'll give you odds on this one too. We hit all-time highs, I'll take you for a really good lunch. If we don't, you have to take me for a mediocre lunch. I'll give you odds.
I don't want to listen. No, that's no. I want a really good lunch no matter what, because I have to go to the lunch and eat too. So I want to eat something really good. We can just call it a really good lunch with a retail value up to $150.
Done.
Which might get us like 2 burgers and 2 iced teas in New York City these days.
All-time highs. Who wants my side of this? Who wants Mike's side?
Yeah, tell us in the chat. Do you think we're hitting all-time highs by the end of August 2025? Dan Frost saying $64 million question. Are we close to a bottom? Adam, do you dare answer that question?
Are we close to a bottom?
Mm-hmm.
Well, I mean, let's see this. We go up every year since 2009, right? We've never had a down year since 2009. So let's take a look at the Qs. So on one hand, you're like, oh my God, we just came off 540. 52-week low is 413. I think that gets tested. But let's see where we were. I like to look. Let's go 5 years. Over the last 5 years. March 3rd, 2020. No, that's not fair. That's COVID. How about we'll go to February 1st, 2021.
Do you want to share your charts, Adam?
No, I was just looking. We're at 316. We're at 316, February 21st, 2021. 316. So, and by the way, if we go to all time and we go before COVID, so 2009, is that right? Do you know what the Qs were at in 2009?
In 2009,
The triple Qs.
I would guess 120 or something, or 100.
In 2009, the Qs were at 25.
No, they've not gone up 25 fold.
Yeah. Well, no, 25 fold would be 525. Yeah. They went up 25 fold in the last 16 years. In 2015, 6 years later, they were still below 100.
Oh, I was thinking, for some reason, I was thinking 2020 or 2018 or something.
2020, there you got a low 160-ish around. But we hit 540. So I just like to remind myself of this. And if we went from 2015, 105, if we went to 300, the market's still up 300% or 200% over the last decade.
Yeah, and if you just put $500 in Nvidia 10 years, or Bitcoin, my God, 10 years ago.
I just like to remind myself that, well, I don't know. It's probably been a bad thing to remind myself,
No, well, it's funny though. At the time when the Qs were at 25, there were a whole bunch of people saying it's going to 10, or it's going to 5, or it's going. 2020 wasn't long ago, and it feels like people forgot about it already. Do you remember negative oil prices?
I just like to remind people on these calls that when you ask yourself how much lower the market can go, it will always show you. So when you ask me if we're at a bottom, if I start to think we're at a bottom and trade that way, then the market will remind me that I know nothing.
Yeah. Friend Omar and Kelly are taking your side. But I have faith.
What's going on with HIMS? I don't know. I won't ever go long that stock. I hate the CEO. No.
All right. Okay. All right. I think that is a good note to close out on. We will be back next week with more hijinks.
The chat got going again, huh?
Yeah, they finally woke up. Omar says, very good, very, very good point about market bottom. Not something.
Yeah, I agree. And Omar, good participation today. But I think for everyone, the key takeaway to remember is this. Be flexible with the market. Don't be stubborn in terms of where it can go. Be light. Be adaptable. For your long-term investment, sure. Over time, historically, things will go up. But what and how is always to be determined. I put my entire pension into AOL in 1999, and it quadrupled, and then it went all the way back to negative. I thought AOL, email, greatest thing ever, but then they came out with Gmail. I'm wondering, if something comes out that replaces Amazon, what will happen? So it's not stock specific. Overall, the market will go up historically over time, but I'm not taking a side. And the more neutral you could be, I think the more success you'll have as an active trader. Fair?
So Bruce Lee had it right. Be like water.
Be like water. I like that. Yeah.
All right. Okay. All right, everybody. Thank you for joining us. We will be back.
Mm-hmm. Michael, I will tell you this. Considering I said you could ask me anything and you got excited about that possibility, I think next week you got to be a little bit more aggressive with that anything. You got to really, challenge the norm. We did get into politics. We did get into Tesla, but
the problem was I forgot.
My goal is to be just 1,000% transparent. I think that's what everyone will enjoy, and that will be the beauty of this call. All right.
All right. Okay. We will get a little deeper next week. All right, Adam. Thank you. We appreciate it. And everybody, click the link below. There's a free options lesson from Adam. It's in the description on YouTube and Twitter and inside StreamYard. Click the link down below. You can get an options lesson from Adam. Okay, Adam, have an awesome day. Happy trading.
All right.
Everybody be nice to each other.